Hi, I'm Paul Heinze, Goldberg Heinze Business Advisors.
And I'm Al Kutchins from KRD, Certified Public Accountants, Advisors, and Consultants.
We're back with episode 3 of Preparing to Sell Your Business. In the previous 2 episodes, we've covered a wide range of things that you should keep in mind, things that probably apply to you. And we urge you to revisit some of those episodes as we continue on with probably several more in that whole arena of preparing to sell your business. Now, today, we're going to be talking about bringing in, contacting, or introducing potential buyers. Al has remarks to begin with in that area. Al, it's all yours.
Thank you, Paul. As Paul said, we've talked about the soft issues of dealing with family and partners in getting them on board to sell. Last episode, we talked about cleaning up the income statement and the balance sheet in order for it to be most attractive and to start to focus on maximizing your EBITDA, which is normally the measurement that sales prices are determined on. So today I wanted to get a little bit more specific, and in that chronologically, we're getting very close to having a prospective buyer come in. And there's a lot of adages around. One of my mother's favorites was, you can't tell a book by its cover. But in this case, a good cover is telling a great story. And first impressions leave lasting impressions. So as you're lining up your buyers, you're going to need to also focus with your attorney or business broker in having an NDA, so that a non-disclosure agreement, so that when you do have a qualified investor, buyer looking for information, you want to make sure that you put as many controls in place that your information doesn't get out to people in the market that where it might be harmful. And we'll talk about that in more detail as we go along. So again, looking at the cover of your book, when your prospective buyer comes in, you want your house in order. And that's not only that you've cleaned up your financial statements, it's a lot of physical things. Have you improved your lighting in the factory? Is it attractive? Because one of the first things you're going to do is give the person most likely a tour, and you're going to tell your employees that it's a banker, because they're used to bankers coming and seeing the facility, because you don't want rumors starting right away. But also, is your computer equipment up to date? Or do you still have the old cathode ray tubes sitting on the desk, taking up more space than the people? Have you used all of the upgrades that your software supplier has available, so that your system is operating at the greatest efficiency, and you can really show it off, how much data you can get, how you can drill down if you're using specific industry software. you want this to be a real image that your company is state of the art or as close to it as possible. The same thing would apply to your financial statements. And this is a multi-year process that we've been talking about. You know, if you're generating your financial statements internally, you know, go to the first step, the compilation. If you're at a compilation, move up to review. And if you're at a review, go to an audit, because this immediately instills confidence in the numbers in a prospective buyer that you've gone to the cost of having an audit prepared on your financial statements, and that it's kind of like an insurance policy to a prospective buyer that you know the numbers are there.
It also streamlines the due diligence process. The buyer coming in then does not have to grapple and grab and try to put pieces together. You make it a fine presentation that makes it a lot easier toward the end goal of a sale.
You're 100% correct, and you skipped ahead 2 items to the preparing for due diligence.
Sure.
And most of our clients that have gone through this process kind of compare it to colonoscopy. It's really a painful process to prepare for. And we have a due diligence checklist that's 23 pages. And while if you have a modest sized business, not everything's going to apply, but if you have a business that is, say, $20 million in sales or more and has inventory, it's going to be a strenuous process. And you might actually want to consider going through a dry run yourself, going through the due diligence checklist, and make sure that everything is in order that they're going to ask for. And that includes, they're going to want to look at your stock book. And a lot of my clients don't even know where their stock book is anymore, particularly if it was, they've been incorporated for quite a few years. So the image of being prepared, being organized, being on top of your business, these are all enhancers to your the value that you're going to be able to ask for. Because if you have old equipment, right away the buyer is going to be thinking about how much money he has to invest to bring your systems up to date, or how much he's going to discount the price that he's going to offer you to do it. It's not much different than if you go out to buy a new home. If the appliances are old, if the property is run down, you know that you're going to have to spend another $50,000 or so to fix it up, and your offer's going to be adjusted accordingly. People buying your business don't act any differently. And this is an area that it's really important to work with a high quality business broker like Paul and his partner Joel, because they're going to sit with you and hold your hands during this whole process. And not only are they going to work to make sure that you're prepared, they're also going to vet the potential buyers to make sure that they're qualified and that they can do it. It's similar that if you're going out to buy a house and you get a mortgage commitment letter from the bank saying that you're going to have the funding, we want to make sure that after your or while your prospective buyer is doing their due diligence and looking through your books and records, that they have the ability to come up with the cash at closing, be it out of their pocket or bank financing. And it's really close to a dating process. Each of you want to get to know the other. Besides being the seller and the business probably being your largest financial asset, you also have a loyalty to your employees, because in most of the businesses we work with, they're family owned or closely held. And employees have been there 10, 20, 30 years. Some of them have been there longer than the current owner.
Yeah.
And you want to take care of them. You don't want to be selling to an a-hole that is going to just, strip the business of its employees, which are really the major character.
Well, that brings up further to what Al is saying. Here comes the buyer. You probably don't know him. And in your mind as a seller, your vision indicates very, very clearly, I'm going to sell to the best buyer available. Someone who's interested, knowledgeable about my business, can keep it operating and make it grow, has the funding to meet my price, mutually negotiable conclusion to the sale, and all the elements, whether stock or asset purchase. That isn't always the case. And I'm sure Al can attest also to what happens when a buyer with no means is starting to look for businesses. There can be, of course, a giant waste of time because nothing will come of it. But then what do you do after they know all of this information about your company? You sign an NDA. What is to assure you, the seller, that this particular prospective buyer was just nosy, just interested in finding out more about you, and not having the wherewithal to complete a significant transaction? Okay, and there are wide distances between the extremes in this particular area. So what's the resolution? The resolution is this: we don't provide everything to the prospective buyer initially.
And certainly when you provide like vendor lists and customer lists, you only provide dollar amounts. All the names are blocked out.
Absolutely correct. You go customer A, B, C, and D, and vendor A, B, C, and D, and you begin disseminating the information as the mutual confidence of a possible or even probable transaction will take place. So you feed the information slowly, and if there is an issue, we, representing you potentially as the seller agent, we will ask for evidence of financial capability in a most professional and most understanding way, so that we can then present through a letter from a bank, from an accounting firm, or some other resource, not the least of which, in an individual or partnership transaction, a statement of financial net worth. Well, if a corporation's listed on the New York Stock Exchange comes in, all of that really isn't necessary. What you're trying to do is have the confidence that these people can indeed pay. There may be a note, there may be financing, it could be a term sale, there could be all sorts of things. having to do with the transaction completion. But as you move along, and Al is absolutely correct, the engagement process, in the sense of marital engagement process, is in fact how it's generally operated. Getting to know the buyer, getting to know the seller, whatever side of the table that you're on. It's familiarity and evidence and capability. Those people who are experienced buyers of corporations or buying their first one, and they are completely organized and offer financial capability evidence, well, now you're in very, potentially very comfortable area. So look, be careful, be very careful in full disclosure, right through the doorway. As soon as they come in, you lay your life before them. No, don't do that. No, don't do that. And we collectively, Al, we can advise you in those particular areas. Okay.
And it's also, you need to, as Paul says, to parcel it out, because you don't want to scare your employees, because we've all seen too many transactions fall apart for one reason or another, and you don't want your key employees to get scared off and go work for somebody else. And as it gets closer to the sale, you'll have discussions with your key people about retention bonuses and things like that, to make sure that the seller gets the ship in the same order that he examined it, and can be successful, because the vast majority of transactions have some form of earnout, and you want to make sure you achieve those goals.
Are you going to
So
touch on
yep.
letter of intent at this point, or are we going to carry that over?
No, I think we'll do letter of intent and the multiple ways of going about selling or transferring a business in the next session, and because they're really tied together.
So the summary is this: the preparation, the accuracy, the purposeful validation of the numbers that you're going to be providing to a prospective buyer becomes increasingly more important. Equipment list, if you're in manufacturing, the viability and accuracy of your inventory system. How is it calculated? And the earlier comment that Al made in terms of software and your computers and your potential buyer's ability to capture and understand the operating system and the software, so that nothing really falls between the cracks. So as organized and as preparatory as you are, that will reflect in the probability and the pace at which it moves forward. It's very unlikely, although it happens frequently, that you will sell your business to the first buyer or buyer group that comes in the door. So think about who is logical to buy your business, okay? There are competitors, there are vendors, there are parallel, vertical, or horizontal examples that could grab your business and make it a part, the missing piece of their pie for success. We like to discuss the logical buyer. Sometimes income buyers individually are not the very, very best buyers of a particular company. So it's worth conversation, it's worth discussion, and it's also worth understanding in the back of your mind, if you've been thinking about the sale of your business for quite a while, who do you envision as being the buyer of your company? Okay. Any closing remarks, Al?
Great comments, Paul. And one thing that's important is our goal is to lead you to a successful sale. But as Paul said, many times it's not the first buyer that goes through, And everything we've talked about and will talk about are to help you make more money. So if you've implemented these things, it's often you're going to have higher earnings the next seller that comes along, so that you might, be getting a bigger paycheck on the sale than you had originally anticipated.
Yes, experience, guidance. When we sit next to you as a seller, or we sit next to you as a strategic search buyer, we're really bringing in a roadmap, experience, understanding, and dozens, hundreds, certainly hundreds of completed transactions. You can reach me at goldbergheinz.com. And Al, how may the viewer reach you?
Anybody can reach me at my direct phone, 847-278-4335, or A Kutchins, Kutchins, at krdcpas.com.
If
Thanks,
any of
Paul.
you are getting heartburn or indigestion on any of these topics and would like to cover them in more depth, just let us know. You have a business, as Al indicated, is probably the biggest set of assets you'll ever get involved in a transaction with. Let's do it right. Until next time, be prepared for episode 4, talking about letters of intent and structure, how to do it. I'm Paul Heinze. Nice talking with you. Nice being with you. Al, thank you very much. And we'll see you all
Pleasure.
next time.